Hello, hello.
Amazing. Thank you guys so much for coming. I'm Josephine. I've been at Sequoia for 6 years now on our early stage team, that's seed and venture. I lead a lot of our investments in both fintech and crypto, and so have had the pleasure of working with companies like leading Bridges Series A in 2023 during the heart of crypto winter, and most importantly for this conversation, being able to work with Henri and Austin leading their seed from 2021. And so maybe just to get started, I think a lot of people here probably know what Privy is, but in case they don't, Henri, do you want to quickly introduce yourself, what Privy does, and maybe talk about what the crypto ecosystem looked like when you entered it first, even from Protocol Labs, and where is it today?
Yeah, thank you. So first, thank you, because I think Sequoia was our first check in the door. Different shaped business at the time, but we have been through a number of market cycles together, it feels like, over the last 3 years, 4 years. But yeah, so I started in crypto from really a side of academics. I was doing distributed systems and cryptographic research, worked at a company called Protocol Labs for a number of years where I worked on IPFS, I worked on Filecoin, and came out of that experience thinking these rails are extraordinarily powerful. Unfortunately, it is incredibly hard to build good products in crypto. And so it doesn't matter how good the experiences that we should be able to build with an ownership layer on the web is if there's no good means of onboarding any user, even those who don't care about infrastructure, which is to say the majority of people on Earth, to these systems. And so that's kind of where we were when we got started. I think the initial view was when you are interfacing with the wallet, all you have is a number. You have OX123, this is the party you're serving. You can't even email them. So a very early example, there's this fellow on Twitter called RuneKek. RuneKek was a big MakerDAO participant, and he had this tweet that went something along the lines of, does anybody know who OX123 is? Unless they top up their wallet in the next 20 minutes, they're going to lose $700 million, which is like a pretty wild thing to have happen. So our take was, can we make wallets more human? Can we connect people to the underlying, in a sense, private key systems so that they can interact with blockchains without needing to be experts? I think what's changed most, and so sorry, just to back up, this is what Privy does. Today we build onboarding and wallet infrastructure. If you've ever used OpenSea with an email, if you use Hyperliquid, if you use Jupyter, if you use Blackbird, if you use Proof of Play, these are gaming, fintech, trading products. We work with them to make it that anybody can basically get a self-custodial wallet under the hood using those products. The biggest change I think we've seen is frankly a lot more pragmatism on the part of builders. We've shifted from a place in which infrastructure informed products to a place in which products inform infrastructure choices, which I would argue is how it should be. And so when we started, for example, the constraints we had to deal with was, this is the infrastructure I want to use. Can you please make my product the least worst for that stack choice that I've made? And I think today people are actually looking at, this is the use case, this is the user. I think obviously a lot of what's happening in stablecoins now means going after a global audience who really doesn't care about crypto, but does care about ownership, does care about dollar access globally. And that drives towards very different ways of building products than it used to.
Also, I think people have probably seen the news, but congratulations on the big Stripe news. Maybe tell us a little bit, especially as you're digging into these different products and products that are being built, some use cases that are being enabled, and especially in the financial services world, how do you see Privy helping shape a lot of that in that future?
Yeah, I mean, we're jumping from being a Sequoia company to being a Sequoia company.
We like that.
We're getting a bigger boat, I guess, and I think a lot of what's exciting for us is just how much we're going to get to ship as part of Stripe and working with their entire ecosystem, but shipping what is essentially the same product. We're staying an autonomous team. We're working through the same roadmap. We just get to have a lot more resources that we can bring to bear for developers who want to build on-chain apps. I think what we've seen over the last year, so we work with about 1,000 teams. Through the 1,000 teams, we serve on the order of 75 million accounts. And broadly, I would say there are 3 core market categories. There's fintech, which is to say payments, neobanks, investment products. There's trading, and DeFi broadly. And then there is, call it social and gaming. And I think it's been very interesting to watch fintech really rise from two angles. One is, I would call it bottoms up. So you are starting a company fresh. You want to create a global product. And this is the first time that you actually have the means of deploying financial infrastructure globally rather than having to pick a starting market and go from there. And so we're seeing it with the likes of Dollar App or other companies who have built really incredible experiences where people can hold dollars wherever they are in the world. And I think on the other side, you see the adoption of like much bigger incumbents, folks like Revolut. There was I think the tweet that launched 1,000 ships. I don't know if people saw the Klarna CEO said, okay, I give in. I'm finally interested in learning about crypto. And then his feed became a wall of crypto people saying, yes, we are here for you. But basically, there's also a real opportunity for incumbents to grow their businesses by actually changing the geographies and the types of users that they can serve. So for us, it really boils down to probably, I would say, three things. First, hold assets. So that is both holding dollars globally, as well as buying and holding Bitcoin, Ethereum, Solana investment assets themselves. Obviously, tokenized securities is becoming a really interesting thing that people are interested in. It's hard to fathom as somebody living in the US. We have Robinhood, we have E-Trade, but most people can't buy and hold Apple stock if they want to anywhere in the world. So that is the sort of invest and hold. The second is remittances, sending money globally. You look at MoneyGram, you look at Western Union, these are all businesses that could massively benefit from these rails being built, and you have companies like Felix Pago or like Sling that are doing amazing work basically building global Venmos, where you can send money to anybody using stablecoins. And then I would say the third is broadly treasury management. That's not a place where we play all that much because it really is a money movement business and we build wallets. So we build the account systems to hold and control these assets. But that's what we're seeing play out. Maybe, sorry, I'll jump in. This is a rare occasion that I get to grill you, so I'm very excited about it. What are you seeing from a Sequoia standpoint? Because you've invested in Privy, obviously, thank you. You've invested in Magic Eden. Sequoia's invested in Layer Zero. Like, you're present all through the stack of like crypto-enabled products. Where are you seeing the most energy in terms of the founders that pitch you today and in terms of the places you're most excited about?
I would say there's definitely a lot of energy around the future of finance and financial services. And obviously, I think stablecoins is one asset in that class. And I think even in the very beginning, I think the promise of crypto so much was around what can you do with financial services, and the promise of that, whether it's DeFi to stablecoins, like that has always been one massive pillar. And you described a bunch of the use cases today, but it's still, I think, worth thinking about and reiterating the fact that we have now USD access for anybody who lives in a part of the country or a part of the world where there is inflation, where their currency is not stable. They have this ability to access USD. That's incredible. Second thing is, if you're a business that has employees globally, and a lot of companies do have that, you're able to pay them out instantly and have that settle instantly. That is pretty insane that that's possible. I think the third category is just money movement in general, right? Any type of cross-border money movement can be made so much simpler and more efficient using stablecoins and using the technology today. And I think that's the first wave. The first wave of any technology is basically, how do we find existing processes and just make them more efficient? I think that's what we're seeing today, and I still think, to be fair, that we are very early in that. I think we are scratching the surface of basically swift replacement in many ways. I think the category that's more exciting, more interesting is the second one that you're starting to touch upon, which is now that we have all these different building blocks, what are the new applications that can be enabled? And it is true. I think as somebody who's looked at financial services companies, fintech companies, but also SaaS companies, a SaaS company has always been global first to start. You build an application, you can sell it to anybody in the world. For a fintech company, you're like, no, I have to pick a specific market. It's super hyper localized in every way, shape, or form, and is very, very rare for any fintech company to actually be able to cross multiple geographies. But because of so much of the infrastructure that Privy and a bunch of other companies, Bridge and the rest have built, you can actually create a global first fintech company. Like a company like Revolut today should be so much easier to build than it was in the past, and I think that is a massive opportunity. I think the second side is think about everything else that is happening in the world. stablecoins helps bridge that middle layer of money transfer, but oftentimes the end state, the actual last mile delivery has been the critique of what is not enabled. And with real-time payment platforms like UPI and Pix today, you actually have the potential to build a global P2P Venmo in many ways. Like that is so cool. And I think the rest of the world is starting to build around that.
So maybe two follow-ups if I can. The first, it sounds like fintech and crypto are marrying closer together, I guess, in the investor's eye. On your website today, I think you can click a toggle to see your companies and you can pick crypto or fintech. Is that going away? Like, are you no longer going to distinguish between the two? Are fintech investments crypto investments for Sequoia?
I think in many ways, the same way that every technology company is an AI company because it is just a tool that you're using, I think most fintech companies will have some version of crypto as part of it. Whether it is one part of the product, it is something that they are doing internally. I do think that definition is getting closer and closer. I do think there are crypto companies that are not in financial services and are not in fintech. So I don't think it is the exact same category, but I do think almost every fintech company should have crypto rails to as part of their stack.
And maybe my second one is, how do you think about B2B versus B2C? You were talking about peer-to-peer payments. How do you look at the opportunity for somebody who's building business applications on these rails versus consumer applications on these rails?
I think for the business applications in particular, consumer applications I think have always been more possible in some ways because that is the crypto audience. And when you had regulatory gray areas, I think consumers were much more willing to lean into it. I think businesses were less so. And so I actually think the Genius Act has been like a watershed moment for this community because it gives regulatory clarity for the first time. You have Bank of America now talking about it. You have Shopify, adopting stablecoins. I think you have all these businesses, to your point, actually being willing to embrace and engage with this technology. You have banks bringing FX online. Like that will change so much of how business payments get made and money transfer gets made on the business side. And so I do think the regulatory clarity, first in the US and then globally, I think will actually help usher in a lot more on the business innovation side. SpaceX is using stablecoins as part of their treasury. I do think treasury is like one massive opportunity across the board that every large company and every large enterprise is embracing.
Awesome. Maybe I'm going to answer a question you didn't ask, but one thing I did want to rebound on is what you were saying about the first wave of adoption being about enabling existing businesses, and the second one of net new things that you can do with the stack. I think it's something that we see a lot at Privy, which is we work with really two ends of the spectrum. On the one side, there's call it stable coins and meme coins. And I think both are super important constituencies for us to serve because, you have on the one side, let's call it the trading group. This is a much smaller market in terms of individual traders, but they're probably the highest LTV users on the web. They're willing to pay insane amounts of money to get access to liquidity and actually trade. And the builders in that space are doing pretty incredible things with programmatic assets. You have things like flash loans. You just have concepts that don't exist anywhere else. And so they are really at the frontier of testing these primitives. And on the flip side, the stablecoin people are delivering this tech at a scale that we haven't seen before. They can literally offer it to the entire world. And at least our contention is that by serving both extremes, we get to sort of temper better infrastructure that's future-proof, but that also scales. So that's been a really exciting part of the work that we do, I guess.
Yeah, but I mean, as somebody who's providing this infrastructure for so many of these builders, I'm sure you face a lot of people who are debating, how do I decide to use these parts as infrastructure? How do I decide to actually build my own? How do you see people making that decision? Does that differ for an enterprise customer versus a consumer-facing product?
Yeah, it's a great question. And I don't have a clean answer. I have an unfortunately very nuanced answer, which means we need to get better. But I think the answer is that bundling really matters, but it matters in different ways depending on where you are in the stack. So again, these are very archetypal, but the trading companies that we serve, and again, these can be 12 people, teams that make hundreds of millions or billions of dollars as businesses, so they're incredibly good businesses. And they understand crypto very fundamentally, and so they are interested in thinking about slippage and thinking about gas fees and having access to the guts of how you build crypto. And they want a huge level of control, but also they are a 12-person team, and so they don't necessarily have the engineering resources to build out UIs. Yeah. And so we'll end up having components that ship with Privy, as opposed to, call it fintechs, who don't want to touch crypto at all, at least insofar as the guts are concerned. For them, gas fees is a foreign concept. And so they want this abstracted away. Conversely, they want to use white label the entire way. They have an existing off system. They have an existing platform. And so I guess buy versus build, I would start with what platform are you starting with today? Do you already have systems? If they work, great. The second is what audience are you building for, and how much of the crypto should you be showing? Is it under the hood, or is it completely exposed? And then I think the third question I would ask is your business model going to be about top of line revenue or bottom line revenue? If it's about top of line revenue, which is to say it's about market growth, then don't sweat the crypto details. Get something beautiful, get it out quickly, and try to take the world by storm, because you now have an opportunity to grow your market in a way you didn't before. If it's about bottom line and percentage or basis points matter in terms of whether or not you've built a good business, then you really should be sweating the details of the crypto stuff. But yeah.
And how do you manage to serve that spectrum? I do think being able to do it actually makes you stronger, but I'm curious, just given how different those needs are, that you're able to actually span that.
I think there's like two things. First, like having an overly flexible product is a very dangerous thing, I find, at least in SaaS and in developer tooling, because no one knows how to use it. So this is, the easy analogy is like GPT-3 had everything going for it, but ChatGPT was actually revolutionary in a way that the underlying model wasn't on its own. Yeah. You need to show people how they can use things. So that means for us, I think, two things. One, we need to work with amazing customers. And so we have a forward deployed engineering team. We have a lot of our work that goes into direct contact with the customers that we serve, because they are the ones who show us how to use the tech. And so we need to be building for charismatic use cases with amazing customers who will show people how it's done. The second is, I think we need to stake out like common hot points in the configuration space that people can use. So broadly, you could customize Privy 500 ways, but there are probably 4 configurations that cover 85% of deployments that we have, and that's how it should be probably. But yeah.
And as you look out into the rest of the infrastructure stack, obviously, Privy is one key component to it. Are there other gaps that you see, or where would you want somebody else to be building to?
I have a follow-up for you after, but I think on-ramping and moving from fiat to crypto remains the single biggest hurdle for adoption today. I think it's interesting because the two extremes in the market feed each other. In a sense, I think stable coins feed digital asset growth generally, and vice versa. Stable coins, I mean Tether, started as a token to make trades on a decentralized exchange, and you didn't want to go back to fiat because it was inefficient and you couldn't trade over weekends. And so in the same way, I think we'll see perps, protocols, NFTs benefiting from stable coins, because people will now have moved to, call it magic internet money, and they can stay there and they can keep living there. And I think conversely, people who come in through speculative use cases will end up needing stable coins on the other side. So this is also an interesting, call it US domestic versus global divide in terms of where the rails are getting picked up. So if there's a call to builders, for me, it would be, we need better on-ramps so that people who haven't touched crypto before can do so. And obviously, this is in huge part risk and fraud question. It has to do with off-chain things. It has to do with fintech things, not with crypto things. But I guess maybe the question for you would be, what would your call to builders? Are there any types of companies or builders today where you're like, this thesis makes so much sense, I'm looking for the company to fund, and like, these are the types of folks that we'd like to see more of?
Yeah, I think on the infrastructure side, similar to you, the last mile is still a work in progress. So that's both on-ramp, off-ramp. And I actually think bring liquidity online, bring a lot of the existing liquidity. And this is starting to work with banks, working with like large traditional financial institutions. I think that is a big opportunity for people who are interested in infrastructure. And then the part that I'm most excited about is, again, once you have these building blocks, what are the applications on top that you can do? And I think people with, like builders with a strong thesis and insight into the space and a clear problem that they're solving is always what we're looking for. And I think on the application side in particular, there are so many opportunities globally and so many markets globally that regardless of what is happening in crypto are just growing massively. The middle class is rising. There's just need for more financial infrastructure for them in general. I think this is an incredible opportunity. And so whether you're in the US or global, if you're building something here, I would love to be able to talk to you.
Thank you.
Thank you, guys.